The clock is ticking for Cyprus. The Mediterranean island nation still needs to raise billions of euros to ensure a bailout from the ECB and the IMF. Joining us now with all of the what-ifs, Theodore Tolias. He is professor of economics at York University's Schulich School of Business. And Theo, it's good to have you back here at TVO.
Very good to be here.
You were joking with me before we started that the only time we see you here is when there's a crisis in Europe.
That's right.
Yeah,
that's
so stop
right.
showing up.
Yeah.
Stop coming here.
I'm going to have to take that very seriously, absolutely.
Okay, let's focus in on Cyprus here. Why did the European Central Bank consider this idea of a levy on the deposits to be a practical solution to Cyprus's problems?
Well, first of all, I don't think it was just the ECB, the European Central Bank. It's the troika. It's the European Commission, the European Central Bank, and the International Monetary Fund.
The three of them.
They thought that the levy would be a good idea. It is not a good idea, as everybody seems to be saying these days, because obviously what that did over the last few days was to effectively shake confidence on the part of people in the banking system. And once people's confidence in the banking system is shaken, then the rest of it can be really very bad.
But this is not a solution that they've looked to do in other countries. So what made that troika think that this would work here?
Well, there's only speculation. Nobody was at the meetings, at least I was not. So the speculation is that, Cyprus seems to have an overgrown banking sector of approximately 8 times gross domestic product. And a lot of that money seems to be money by non-residents. And they thought that, this business model is unsustainable. And they thought that maybe it's time to take action. And they saw that as an opportunity to actually use the levy to generate some money, like $5.8 billion, to actually complement the overall $17 billion bailout money needed for Cyprus.
The troika that you've talked about, the European Central Bank, the International Monetary Fund, the European Council, were they hoping, do you think, to set a precedent here? If this works in Cyprus, maybe we can do this in other countries as well. What do you think?
Well, if they were hoping to do that, I would respectfully say that that would be a very stupid idea, because you don't do this. People's confidence in banks is the very foundation of banking. So if you're going to fix a car, you don't take the wheels away. And depositors are the wheels of the banking system.
They they targeted basically everybody, large deposit holders, small deposit holders. Good idea?
No. No. I think the idea itself is not a good one. Now, targeting the small depositors was by far the worst idea, because the expectation is within the Eurozone that people with deposits up to 100,000 euros are safe, and those deposits are secured.
Guess what?
So now, now everybody in Europe, especially in the South, depositors are thinking, what should I do with my money? And this is not a good thing. This is terrible.
Cyprus nationalized its second largest bank last year, the Cyprus Popular Bank, and apparently it's considering nationalizing pension funds now as well. Does this make economic sense to you?
Well, no, I don't think it does. I don't think now this is on the table. Touching the pension funds, I don't think it's on the table right now, because apparently the Troika is not approving of it. So what is on the table now is, again, a levy. It's coming back.
Yeah, now let's just remind everybody, the Parliament turned this down once already, right?
With a resounding no.
Yes, and despite that, it's still under consideration.
Yes,
right?
That's what the speculation is, yes.
Yeah, the Minister of Finance has said it's still out there as an idea.
But not for the small depositors.
Maybe only for larger ones now.
That's the speculation, yeah.
Would that, do you think, have more political, what's the word I'm looking for, appeal if it were only on large deposit holders?
Well, it might for some people, but I think what is at stake here is the very, let me call it, business model of Cyprus. So if they touched depositors' money, I think this is going to be a disaster for the Cypriot economy. And this is not a very promising thing for the future of the country.
Okay, the Cypriot parliament already technically turned thumbs down on this idea of taxing the depositors' holdings. What message do you think they are trying to send to the troika that we talked about earlier by doing so?
Well, I think the message is that we need to protect the integrity of our economy. We need to make sure that moving forward we have something sustainable going on for our economy, meaning the Cypriot economy. Mm-hmm. And by moving in that direction, this constitutes, this proposal of the levy constitutes a direct threat to the sustainability of the Cypriot economy, at least short to medium run.
Do you think they're also saying, we're not the only ones who are going to take a haircut here, your bondholders have to take a haircut too?
They might, yeah, that's actually in the cards. And they're thinking also in terms of other things, like, what people need to understand is that Cyprus now is right in the center of some major discoveries of oil and gas.
Where?
Which complicates things, the southern part of Cyprus. Huh. So that's a major consideration, not only on the part of Cyprus, but also the EU, Turkey, Russia. So the players have all of a sudden become many, and the interests, very complex to address at this point.
Does Cyprus itself own that area where the oil may be?
A number of, they divide the area into small pieces. This is under the sea, mm-hmm. right? And they actually declare sovereignty on individual parts of it, and most of it is under the Cypriot sovereignty. However, Turkey has come up recently saying that this is not just for the Cyprus Republic, this is also for the occupied territory in Cyprus, and this is going to have to be shared. So that complicates the whole thing.
Okay, let's look at the bigger picture, Theo, if we can for a second. This is a small country. Mm-hmm. This is 1 million people, mm-hmm. right?
Less than that, yeah.
Less than 1 million people. Mm-hmm. And yet, as we've seen so often in the past, there is this fear that if Cyprus gets into trouble, it could explode over to the whole Eurozone. Mm-hmm. Why is there so much fear about what might happen in Cyprus when it's such a tiny part of the Eurozone?
Well, it's setting precedent. That's basically it. If Cyprus was given no choice but to exit, and it's up for the Cypriots to decide, then the rest of Europe and the Eurozone and the markets are going to start thinking about the fact that the euro is reversible.
Is reversible.
So if that gains any currency in the markets, the idea that euro is reversible, then that's going to set in motion, something like would be reminiscent of a nuclear reaction.
But is that really true? It's like saying, if Cyprus goes, then Spain might go, then Italy might go. I mean, is that really true?
Well, I would think so. I would think so. At least the markets would be willing, if there is a crisis erupting at some point, they would be willing to speculate on that prospect.
So how stable would you say the Eurozone is now, given the fact that Cyprus's parliament has said, nope, we're not accepting the tax?
Well, if you look at the markets seem to still have confidence that the EU is going to be able, the Eurozone is going to be able to actually address this successfully. In my estimate, I think after the no vote in Cyprus, and after this proposal was actually presented, namely the levy to depositors, I think the Eurozone now is significantly more unstable than it used to be last week.
Significantly more? Even with this one little country of less than 1 million people?
I would think so, because of the ripple effect, you see. So what determines really the situation here is the interdependency, not only in the banking sector, but also the whole crisis and sovereign debt situations in the south. So this interdependence, for instance, in Greece, there are, the two major Cypriot banks have major operations in Greece. And I think just today it was decided between the two governments, the Cypriot and the Greek government, that all the operations of the Cypriot banks in Greece are going to be actually a particular Greek bank, I think the Bank of Piraeus, is going to actually acquire all of those branches of the Cypriot banks in Greece. And this, to me, sounds like a stabilization kind of idea to actually somehow prevent the spreading of the negative consequences in the Cypriot banking sector to Greece.
Let me just focus on the banks for a second. They have not opened since all of this took place, right?
No.
They're still closed.
Yes.
Is there How much of a fear do you think there is that if they reopen the banks, let's say on Monday, there will be a run on all the deposits?
Oh my God, that's key. There is a lot of it. I mean, people are scared to death about their savings, so they're going to be running to get their money out once the banks open, unless there is at the table something which is very credible. There is a very strong commitment on the part of the EU and the Eurozone authorities that they are going to protect people's savings no matter what. They're going to do whatever it takes to make sure that the money in there is safe.
To keep confidence up.
Very hard to do. Building confidence and credibility takes a long time, but it takes a split of a second to destroy it.
So
and I think that's what happened.
They can't open these banks then. Unless they've got a deal, they cannot open these banks.
No, not at all. Yeah, they can't. They can't. And the ECB has given them a deadline. And the deadline is Monday. Unless there is a deal, you know, they are going to stop providing the liquidity necessary for Cyprus and the Cypriot financial institutions. So now, for another, I think, less, you know, I mean, you know, this is unreasonable to me. You cannot really force a country to make a decision on such crucial matters over a weekend. And yet this is what it is now.
Can we play some what-if scenarios here?
Absolutely.
Okay, what if Cyprus strikes a deal with Russia? What are the implications of that?
Well, first of all, this is unlikely. The only thing that is likely is for the Russians to extend and refinance the existing loan of $2.5 billion to Cyprus. I think it's probably euros. So that's likely. But if the Russians get into the game, then I think the Cypriot leadership will be in a dilemma. But my sense is that it's up to the Europeans, to the troika, to make sure that Cyprus is not forced to actually exit and start thinking in terms of creating a partnership with the Russians.
Okay, well, let me follow up on that. How comfortable or uncomfortable do you think the troika would be if the Russians gained a financial foothold in Cyprus? Well,
I think they would be uncomfortable.
How come?
Because Cyprus is a member of the Eurozone. And if the Russians gained control of the Cypriot banking system, then that would actually deprive Europe and the ECB of a very significant kind of lever in terms of monetary policy and the overall design of the Eurozone. And Russia is not Cyprus. They are a big player in the region. And geopolitically, I think, it is also very critical because there is a historical good relationship between Cyprus and Russia. And given now oil and gas deposits being discovered in the region, and given Europe's critical dependency on energy from Russia, now Cyprus becomes a very, very interesting prospect for Europe to actually diminish that dependency. And actually in Greece, there are new deposits of oil and gas discovered as well. So that changes the dynamic significantly, I think.
Okay, another what if. What if Cyprus were to impose these taxes, these levies we've talked about, on depositors, but only those who, say, had more than 100,000 euros in their accounts? What would be the ramifications of that?
Well, that would destroy the Cypriot business model, so to speak, and that would actually be to the detriment of the Cypriot economy, medium and long run for sure.
Really? If they exempt people with less than 100,000 euros?
No, if they taxed any of the deposits, even if they exempted the small ones, a lot of investment money would actually run for the doors, and that would be actually damaging the Cypriot economy.
Okay. If the Eurozone relents and doesn't enforce the deposit levy, what are the implications of that?
Well, I think that would be a good point, good step in the right direction. Because I think what Europe needs to do is to demonstrate solidarity with the member states. We definitely need to move in the direction of more Europe, not less. We definitely need to move in the direction of a more democratic Europe, not less. And I think one of the things that needs to be worked on is the whole idea of mutualizing sovereign debt in the context of the Eurozone, so that Europe moves in the direction of becoming the United States of Europe, which is the only sustainable long-term solution for the European Union.
But that means basically you're asking Germany to, belly up to the bar and buy everybody a drink, and they don't seem to be willing to do that.
Well, I think they don't seem to be willing to do that because, by and large, the German public is not exactly well informed as to what is going on. German citizens, they are very hardworking people, like everybody else. They should realize that, a lot of, the dynamism of the German economy owes to the fact that Germany actually exports quite a bit to the rest of Europe. Mm-hmm. So pretty much like we have here, transfer payments and equalization payments to keep the federation together, this is something that Europe needs desperately right now.
Okay, what if, worst case scenario, the banks collapse?
In Cyprus?
Yes.
Well, again, that would be a terrible, terrible thing to happen because the banking sector, as you know, is interdependent. We had the collapse in 2008 here in North America on Wall Street, and the next day there was a bank collapsing in the UK. Mm-hmm. And Gordon Brown back then was telling people, and rightly so, that desperate circumstances require desperate measures. And he moved to nationalize the bank, put it under control for a while to make sure that, that serves the public interest. I mean, this action serves to make people remain confident in the banking system.
And many people think he saved the financial system,
well,
in fact.
There you go. I think that's exactly the kind of leadership that is needed right now in Europe.
Okay, let's in our last couple of minutes focus on two basic but complicated questions. How much does the Eurozone need Cyprus?
Well, I think the Eurozone needs Cyprus as much as Cyprus needs the Eurozone. And if I were to actually be blunt here, I would say that the Eurozone needs Cyprus more than what Cyprus needs the Eurozone.
How come?
Because if Cyprus exited, then again, the idea would be that the euro is reversible. This is the last thing that the ECB and the European leadership would have liked to see happening, like this idea emerging, like the reversibility of the euro. Mm-hmm. For Cyprus, if they exited, well, we have the Icelandic example. Iceland was not in the Eurozone, and they, a small economy, very small economy, smaller than Cyprus, they actually took steps to ensure they let their banks fail. Mm-hmm. They devaluated their currency depreciated to be exact, and now they are on the rebound. They have been for quite some time on the rebound.
But they're all sharing the same currency in the Eurozone. They can't do that.
Well, exactly. That's exactly what I'm trying to say, that Cyprus has the option to exit. This is going to be costly in the short run, there's no doubt. However, Cyprus was a center of international finance even before they joined the Eurozone. And their position is particularly strategic in the Eastern Mediterranean. I think it would be wise for Europe to actually make sure that Cyprus is not forced to exit. And again, to my mind, the single most important threat right now is the threat of Europe, the Eurozone, not making it in a sustainable way. Because then, if the Eurozone collapses, I think we are going back at the speed of light to the 1930s.
It's going to be a fascinating weekend. We'll keep an eye on it.
I think so, yeah.
Okay.
Yeah.
Theo, thanks very much for coming to TVO tonight. Theo Tolias from the Schulich School of Business at York University.
Support Ontario's public television. Donate at tvo.org.